It is 9:55 a.m. London time, and it's March 17, 2020. We're gonna take a look at the markets. It's definitely slightly more quieter today than usual, but gold is down with almost 3% today. So we're gonna talk about that. Bitcoin as well is up with 4%, but it's not a really big deal given that thinking decline with 35% in one day and gain with 15, 20% the second day. So we're going to talk a bit about that as well, but again, not so a bit quiet today compared to what we've seen in the last few days. We're going to start though with the euro, and the euro continues to be in a downtrend, as you can see. It's trading lower and lower in the very short term. Now, in the big picture, it's a bit difficult to say what's going to happen next. Realistically, if you look beyond the coronavirus issues, most likely, I still think the dollar is going to gain because they cut all the interest rates lower. They put in QE and things like that. And the US has already a very strong and dynamic economy. So whenever the coronavirus goes away, you'll probably see the US pick up faster. And that is something why I think we could potentially trade lower. Now, of course, we don't know what's going to happen until we get clear the coronavirus issue. And in the past, the Federal Reserve has actually been faster to react than the ECB. And they've done all the different QEs and so on and so on. So you can easily have some really strong pushes and moves. For example, I remember like the episodes here in 2008, the market was at 160, went all the way down to 125, and then it rallied strongly to 147, and then down to 126, and then all the way up to 151, and then all the way down. So the big moves. So that could happen if central bankers continue sort of engage and do more QE and so on and so on. So that's something we don't know for now, right? But then looking beyond that, probably lower. Now, if you look at it from a technical perspective, it's difficult to say what's going to happen here because you had a move to the downside, get a break to a new multi-year low, and then you have a complete reversal. It took 18 days for the market to go all the way up and create a new 2020 high. That high was pretty much in line with the highs seen in January 2019. So pretty much 2 years of trading, 2019, yeah. So 1 year of trading literally covered, that range covered in 18 days. And what leaves us now is some sort of a pattern of expanding volatility where you can do like this and then you can do like that. That's called the megaphone pattern. And it's a very difficult pattern to trade with unless, of course, you try to trade it. You try to sell out these lines, but effectively is difficult. It tells us we don't have a strong trend and things can become much more difficult. So I don't have a very strong view here on this market, but if we do swing up to something like 113, then I do think people are going to sell here with maybe stops above the high in the very short term as well. If we do take out something like 110.51, then we can probably go a little bit lower, maybe to 109. But again, I wouldn't be putting my money on any of this. All right, so here's the pound versus the USD. And you might remember a few days ago and even before that, we said if we take out these levels, we're probably going to come back down again. And look at that. We pretty much removed most of the gains that the pound had. And I think this has to do with the fact that Brexit negotiations are not happening right now. And they're probably not going to be any, Prime Minister Johnson and then top leaders of the EU are probably going to be able to be involved here for quite some time, at least for the next 3 months or so when they fight the coronavirus. Which means that there's going to be very little time to bring out some sort of a deal. And last time I checked, the UK government had put into law that the UK will leave the EU trade deal or no trade deal by the end of this year. And there's only like 9 months left, 8 months left very soon. So, it looks like the UK could potentially be crashing out. So that is also one of the reasons why we're going lower and lower and lower. Now, looking at this today, what can we do then? Well, we said in the past, sell here if you wanted to. The market declines. If you manage to capitalize on that, congratulations, of course. And if we look at this today, I've been looking for a pullback, but that is not really happening right now. So I think we need to tighten this up because we just traded below the October 2019 low, and the next level is 119.42. So I don't really like it too much when I have to do this, but we have to come really close to price. So we'll work with 112, 124.34, and then maybe we can sort of potentially sell on a corrective move, maybe to 123. Of course, you can always go down lower. I mean, you can go use lower and lower time frames. But if you are struggling with your trading, if you're not making money, then trading on a shorter term chart is not going to help you. Trading on a big picture chart is going to help you. At least that was my experience. You know, trading on breakouts on the 4-hour and the daily chart put me into a position where I'm profitable for the last 6 years. I wasn't profitable before that, and I traded for many, many years, and it didn't really work out for me. What else? So dollar yen. So dollar yen is also like a bit like the euro USD. It's a bit of a messy chart where you had, let's switch to the weekly. So you had that false move to the downside, but before that you did try to trade higher. You had a few trend lines. If you would have drawn a trend line like here, you would have gotten a signal to go long. If you would have sold in the pattern here, I mean, you could have bought here, sold here. So here again is a bit like a euro USD. You get conflicting signals, and there's no strong trend here, which just makes this very difficult to trade. Now, sounding a bit boring here and pessimistic, but there are stuff that are trending very well, and one of them are stock markets, right? And here, I put on a pitchfork today. So effectively, I drew trend lines from here to here, more or less, and then I pushed everything back. So there's a trend line that goes through these highs, and then you have this other trend line here that sort of does an okay job. And if we're going to stick with the levels from this chart, then it does suggest to us that from pretty much maybe 109, 108, 80 or something, we can be bearish from here. We'll stops above the high up here. That is what this market is suggesting to us. And then we'll attack the lows again. Gold prices, this is a weekly chart. So we're just above that low here. And we're seeing some people supporting the price a little bit. But in the short term, you're still dealing with the downtrend. The price is creating lower and lower and lower and lower highs. And as long as the price creates lower and lower highs, it's going to be a downtrend. Of course, I'm sure there's some people down here trying to buy dips, stops below, just because it was an important level and it could potentially be an important level again. So one could do that, and the alternative is you just continue to be bearish. But tactically here, what's sort of the best thing to do? I would do like this. So back to the weekly. If we take out 1444.96, then this may happen. We'll go down to 1398. I like that scenario. Then you have the other scenario, which is to wait for the short-term downtrend to end. So if we take out this high, the market may potentially do something like that. It will probably go up first and do something like this. So we'll go up, take out the high, go down, and then go up. And I would prefer to capture the low whenever that happens. Maybe we'll go up today, come down tomorrow. Or maybe we'll spend another day here and then go up. The alternative again is we just go down and then we take this out. Ideally though, what happens here is that this maybe goes up a bit and then down and then up and then down. Because right now this is the last high. Because that high is going to work like the stop level. So people that want to sell here, they're going to say, okay, I sell here because I know we take out the low, we're probably going to go lower, but where's my stop? If we go down straight today, they're going to say, okay, I need to put my stop loss up here potentially, in worst case. And not everybody wants to do so. And that is why it's good actually if it spends another day or two here, making a decision if the price wants to go down or higher. Crude oil. All right, crude oil is under pressure, of course. So they do the quantitative easing, right? They do the quantitative easing. They cut the interest rates to almost zero, and all the different banks do it. But the market are not really buying stocks right now because everybody's terrified, and rightly so. I mean, some people are losing jobs, and if this doesn't go away quickly, then it's gonna be an issue. In China now, I saw some pictures. I think they're bringing the children back to school, and they're trying to go back to back to business as usual. Of course, you go into the buildings and they will check your temperature. If you don't have your everything in order, you need to go back home again. So it's a lot of restrictions as they try to root out the virus. But things are going back to normal, and they did that very good because they closed everything down very, very quickly. In Europe, as you know, people have been a bit slow, and people continue to be very, very slow. In London today is still quite busy. I understand not everybody can work from home, but I think given the amount of people that are still out on the streets in London, there's going to be more and more restrictions. Anyway, long story short, people don't have the confidence yet, and I think what's going to happen is that we need to see the growth in viruses slow down more, and that is maybe when they start to buy stocks, and maybe that is when they want to start to buy crude oil. So I'm personally not buying crude oil here right now. I did buy crude oil here initially, somewhere here, went to bed, and the thing went down more. When I woke up, it was pretty much a break even, and then it went up for a bit, but it didn't go all the way up. But technically, again, we're just above support, and someone put a gun to my head and said, Alex, you need to have a position on here, then I would say I'm probably going to go long. That's what I would say, as long as you trade above 25.93. So let's talk about stock markets. So stock markets are down a great deal, right? So this is the German DAX, which is currently down by 38%. Now, this is a 55% decline. That pushes us back to 2012 lows. In the recession of 2008, the market declined with 55%. As far as I understand it, people think this is no way as bad as 2008. There are definitely a lot of weak companies out there. People will lose their jobs. But it's all about the risk-reward ratio. So obviously, if we go down with 55%, even if we bounce back up to the lower level, so you're looking at a 65% return versus what? Maybe a 30% drawdown more? Or maybe this is it. So the risk-reward ratio starts to become really, really good. Even now, we would argue that the risk-reward ratio is good. But again, people are scared. People are not buying. They don't want to buy right now. And we need to respect that. The trend is bearish, and it will continue to be bearish as long as you trade 9879.5. And we had a rejection at the 50% level. If we swing back up to the 50% level, I think people are going to sell again. I think people that did sell here this morning are booking profits as we speak, because this could easily just swing back up. And I think we go up, then we're probably going to attack the low again. And then when we go to the 2013 low at 7383.9. And as long as trade below this level, it's going to be bearish. And when we take that out, it's going to be bullish. If we take a look now at the S&P 500, so this is your S&P 500. I'm actually having a neutral stance here to some extent, because when I look at a bunch of other different markets like the Dow Jones, the Nasdaq, and then I'm starting to think that maybe we shouldn't be too bearish. Now you got yourself a double bottom here, and you got 2 lows, right? And then you got a high. This is a tiny double bottom on the 30-minute. The way to trade double bottom is quite straightforward. The difference here gives you a target. So another 132 point slide in the S&P might potentially reach that low here at this level here, which is 2250. So that is the next level, I think. Now looking at it from a big picture perspective, I mean, this is the low from 2018. If we bottom out here, wouldn't surprise me a bit. The market is down with 28%. In 2011, it was down with some similar amount, 29. The RSI on the weekly is oversold. So again, people are scared. So what are we looking at here? Well, let's see if I can find it now. So the US done some good stuff. They told people in Los Angeles and in New York to stay home. There's small places. I think San Francisco, I think it was actually stay home. And this is some good steps. I think the US, and particularly South America, are learning really, really quickly from the mistakes that were made in Europe, in Italy, and some of the mistakes are still happening here. And then and also what's happening in China, because you have both versions now. You have the take it easy, bit of European style, where a lot of people died already, or you have the Chinese version. So I think people are at least trying the Chinese version now because it's very difficult to justify. At the end of the day, you know, you didn't close your country because you wanted to save money. So what's more important, life or money? I think most people would say life. Even the rich people, you know, they spend a lot of money on their health. So yeah. Anyway, let's take a look at the numbers. Italy. See if we can add United States here. Okay, so this is interesting. They don't have the data here anymore. I find that very interesting. So they have some issues with the data. In US, you have 4,743 right now. But this is what's interesting. You see this in Italy. This is not that bad, actually, if it is what it is like this. Yesterday, apparently, there was a growth rate of 3,590. This day before that was 3,497 new cases. So you start to see, of course, it's just one data point, so let's not get too excited. But you start to see some the acceleration is slowing. All right, and they implemented some of the changes already on March 8th. So it's been 1 week and 3 days. I think maybe by the 22nd or so, they should hopefully start to taper off. And if it does indeed taper off, as I said before, I think more governments are going to be comfortable and say, oh, look, the Italians is shut down for like 2 weeks. Look at that. Numbers are already looking good. Of course, they already started to do similar stuff in Spain, where you can get fined if you go out. And I think they're going to do something similar in France. I think they're deploying some 100,000 troops or so to make sure people stay at home. So hopefully we start to see this turn around. And then hopefully UK and US is going to follow very fast. I think the UK government estimated that the UK is behind Italy by some 2 weeks or something like that. And that is why from yesterday, there's a lot of people already staying at home, but there's also a lot of people on the streets. So I think there's more needed in the UK before things properly slow down. But yeah, this is what you want to keep an eye on. This in China, when the numbers peaked, that's when things started to stabilize. And then again, we have all this push from governments. So maybe give it another 2 or 3 weeks, and then maybe we can see some stabilization, if not already very soon. But to trade this, you need to keep an eye on the charts. And why do I keep on banging on so much about this? Because these markets, when things stabilize, they're just gonna soar. I think it's gonna be a very good opportunity here. If we just take a step back for a few minutes and we just take some fibs for this, just do like that. If we just go to the first fib, so from today's low, that's a 13% return. If we do 50%, which is not unlikely, that's a 20% return. So that's what keeps me interested in the markets right now. So we got Paul Owen. Good morning. Hope you're doing good. Haven't seen you for a bit. I think you even changed your profile picture here. Hope you're doing well. We have Stefan. Hi, what do you think about the dollar CAD? I'm still short against 142.50. So dollar CAD, I'm sorry, man. I am bullish. So I'm bullish, but remember we said look to buy here, and we reached this level on Sunday. If one is still long, I will book half, if not 75. I will actually just book 75% of the move. Then look for a correction. If we go back to 137.95, I will buy again. Stops are going to be below 37.76. If you look at this from a big picture perspective, you have this level of 146.95 being a target. And then, you know, there are different interpretations on what it is we're looking at. But this looks like a head and shoulders with a left and a right hand shoulder. And you have the break here that gives you that target. So I'm going to continue to be bullish for longer. Good morning. Philippines is the first country to suspend operation of all the stock markets. All right. I didn't know that. Yes, that could easily happen, guys. That could easily happen. So I didn't know that actually. Thank you for letting me know. Yeah, there could easily be some suspension. It can easily be a situation where they say, like they did in China, right? So in China, they said, we're locking down the stock markets, and then they waited and waited and waited and waited. And then they opened the stock markets. And the Shanghai Stock Composite declined quite strongly on that day. But then that was it. So they closed the markets on the 23rd of January. And then on the 3rd of February, they opened, the market gapped. Then you had all the money pumping in, and they all went up again. Then of course we're revisiting now as we're having the second leg of the coronavirus spread. And if things go crazy in China again, then yeah, you will have a situation where things can go bad again. I think so, though, that hopefully, I think I saw some pictures. I think it was in the United States. They already started to do some human trials. A company over there, and then there is this company in Germany that apparently President Trump wanted to buy. And then there is some other company as well that are starting things. So people are really pushing to get this, and we'll see what happens. But you know how humans are. We always survive, and I think we'll continue to survive even against this little bug that is causing a lot of people to be sick and a lot of people to die. But we're going to do good, and I think we're going to come out all right. But as humans as well, we all panic a lot, and that is obviously not going to help too much. But thankfully, there's some people out there that are focusing on getting that vaccine, and I'm very confident we're going to get that soon. Look at the markets, though, then it's it's a different attitude altogether. So if they close markets, I'm not sure exactly what's going to happen, but you need to be careful, guys, because I don't know how long they're going to lock it, but they could technically lock it for, say they lock it for a month. Not that they will do, but if they would do, then if you're trading with leveraged position, you could potentially be paying financing costs over that period. So you need to think about that as well and talk with your brokers and all of that. For now, though, there's no signs, what I can see, that they're going to shut down European markets or US stock markets. But maybe they'll come at one point. Again, I think we're starting to see some positive signs that things are getting, people starting to take command of the situation instead of letting things just influence everyone. By the way, before I forget, so we have this special webinar about the coronavirus. It's going to be quite similar to what we're doing here, but we're going to have more time. It's going to happen on Wednesday. It's going to be from 6 p.m. until 7 p.m. And you can check that out. We're going to talk a bit more what happened in the past and try to see what can happen in the future. It's going to be more a personal setting as well. Everybody that signs in has the possibility to answer questions. And it's going to be from 6 to 7 p.m. on Wednesday. So you got the registration link there. You just need to register, and then you're good to go. So we have Antonio. I hope you're doing good, Antonio. How is the situation in Barcelona? I hope you're doing good, and hope your family's doing good as well. Keep me updated. Okay, guys, we don't have any more questions, so we're going to wrap things up. If you have anything for me, you can always reach out to me. I'm on Twitter at ATFX. There we go. So I'll send you this if I can find it. There we go. Antonio says, we're locked down under police surveillance. You're in prison. You know what happened this morning? So I was trying to do some stuff online and my internet died. And I'm like, come on. And my internet was dead from yesterday. I just didn't care to check it out. And then I go to the cupboard to see what's going on. And all the lamps were switched off from my modem and the other stuff. And I'm like, come on. They have electricity issues. I don't have any internet anymore. And for 1 second, I panicked there because I'm like, am I going to be locked down for a month or two with no internet? What's going to happen with me? But thankfully, it was just a electricity issue. I just had to push a few buttons and get rid of all the junk around the electricity outlet, and I got that sorted. But yeah, imagine that, locked up with no internet. I had so many books before, but not anymore. I don't like to hoard things, so I get rid of stuff every time I move, and I move quite a lot. So I would have been in trouble. No Netflix. Think about that. All right, guys. Have a great day, and be careful out there. Do take care of yourself. If you can work from home, do work from home. I want everybody safe and sound, and I want everybody back tomorrow and or wherever you want to come back. But do take care of yourselves out there, and follow what the government tells you. Do more than what the government tells you. The government here tells you do not use anything like this. I understand that, because if everybody wants to have a face mask, this is not going to be available for everyone. But I was a little bit saddened this morning when I did see that the police officers don't even have masks. I wanted to give them my masks, but I only had carrying one, so if I had more, I would have given to them. Because these people are in the front line. They need to stay there, making sure that everybody is fine. So they don't have masks, but what can we do? We can do our bit. We can stay out of trouble. Yeah? If we can stay out of trouble, we help these people. They don't necessarily have all the protective gear, even though officially that's not what you need. But look at any videos from China, and you can see all the militaries in straight lines. Everybody has masks, which, you know, is better to have than not. So think about that. Okay, guys, have a great day. Hopefully I see you guys on Wednesday as well for the market update or the special webinar. You can click on it here. If you're watching this offline, you can't find the link, but it's here. Have a great day, guys. Stay safe out there. Thank you.